Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of June 29, 2015. Hello, I'm John Thomas with Prime Residential Mortgage. To give you an update. Well, last week was certainly not good for Maryland mortgage rates. Take a look at the bonds on the screen. Mortgage rates tried to make a recovery last week with the blue arrow up, but they sold off this past week. Mortgage bonds sold off, dropped down to lows of 2015, which puts interest rates to record highs for 2015, the highest they've been. Now, if you look at the chart all the way back to April's when bonds hit a high, interest rates were at the low. They're in the threes. They've been selling off since then, moving interest rates higher. So they're well into the fours now. And the trend is for them to keep going higher. But on Friday, we did hit a floor of support. And going into the weekend, what had rallied the stock market and pulled money in the bonds was we thought we reached a deal with the Greece bailout. Well, that has fallen apart going into the weekend. No deal in sight. Looks like they may default on their debt, be a run on the banks for cash, and they could leave the European Union down the road if nothing's reached. So with that in mind, we're going to recommend carefully floating your Maryland mortgage rate on Monday to see if we can rally off support on the news that the Greek deal fell apart. Now, if they come out with something to save the deal, that's probably going to rally the stock market and the bond will continue to sell off. We quickly switch to a locking stance. Now, where are rates headed and what's been going on? If you look at that next chart on the screen, you can see the mortgage bonds have been on a stair step down. They've been making lower lows and lower highs, moving bonds overall lower since April and moving interest rates higher. There's nothing to pull us off this stair step down escalator. Mortgage bonds look to keep going down. Mortgage rates will keep going up. Now in the short term, hopefully we've rallied off some support. And with the Greek deal falling apart, that's why we're floating. But long-term trend, guys, unless something changes the market, we're going to see rates continue to climb. Now, in economic news, big report last week, gross domestic product, GDP, final reading of first quarter of 2015, stinker, negative 0.2%. We actually did not grow. That's not good news. Basically, they blamed the negative GDP in the first quarter on a couple factors. First of all, a negative trade balance because of a stronger dollar, which we've been talking about, harsh winter weather, and then the closing of the West Coast port. That's been blamed. So if we don't see a big rebound in the second quarter, we've got bigger problems in the economy. We need close to 3% GDP to have a healthy, growing economy. So we need to see if we can turn things around there. Now, the Federal Reserve had their meeting for June, and they did not raise the short-term interest rates. That helped the stock market rally. But they are hinting they may raise short-term interest rates, which is basically the Fed funds rate, the next meeting in September. If they do that, that could actually be good news for mortgage bonds because that would probably mark a sell-off in the stock market, which would help long-term rates. They also lowered their economic forecast for the United States. They were predicting 2.3 to 2.7% growth, which is the GDP. They've lowered that to between 1.8 and 2% because they see the economy is not doing as well as they had hoped. Then in housing news, new home sales for May 2015 hit their highest level in 7 years as sales rose 2.2% in May from April to an annualized rate of 546,000 new homes sold. That's nearly 20% higher than May 2014. So great news there on new home sales. Now, the CFPB issued a statement. They are delaying the implementation of the new TRID or RESPA integrated disclosures. It was supposed to go into effect August 1st, replaces the GFE and the HUD. Well, that's not coming into effect now to October 3rd. Now, it was not to help out lenders in the real estate community. They screwed up. They were supposed to send a report within 60 days of the change to Congress. They missed that date. Kind of funny. They missed the date for a disclosure on the Disclosure Act about making sure lenders hit their dates. But anyway, pushed back to October 3rd, so we got a reprieve there. And then USDA Rural Housing made an announcement on October 1st, 2015, all new commitments. They were increasing the guarantee fee from its current 2% to an increased 2.75%. So on a $200,000 purchase, that's going to increase it from $4,000 to $5,500. So you will see a noticeable difference in your payment. So if you're doing a USDA loan, get under contract and settle before October 1st. Now USDA on Friday at the 26th, we're working on files submitted the 18th, so their turn times have ticked up over the last couple weeks. So please plan accordingly. 45-day closing at a minimum on a USDA loan to allow them time. And then the local news, the next first-time homebuyer seminar is Saturday, July 25th in Towson, Maryland at the Sheraton Baltimore North Hotel on Delaney Road from 10 a.m. to noon. You can register for that event by giving us a call in the office, 410-412-3319, or online, www.marylandhomebuyersseminars.com. Look forward to seeing you guys next week.